Uh, I've noticed that they've been kind of like a slight challenge when it comes to the trading world, and most of you have come to understand that it takes a lot to become profitable, let alone to become consistent. It's easy to make money with just hitting buy and sell, but to actually make money from markets, from trading, where you'll be able to use that fund and believe in it and trust that uh, I can do this and keep doing it 1 week, 1 month, that after 1 year, 2 years, you're still in the game. This is my own obsession. This is what matters to me. And after doing this for 6 years, I've discovered that it takes roughly two things to become profitable. And trust me, if you don't know how to use the two things I want to teach you, you will never get it. You can start trading, learning the basics, what is forex. You can do all those things on YouTube, but they are the ones that are never online. And those things are what people call secrets. Those things are what people call keys or what they bring to them and they don't give it to everybody. So I'm about to show you how to do it. If you've been trading for more than 3 months, right? If you've been trading for more than 3 months, you've been trading for more than 6 months. You know, I'm not here to teach you what is Forex. Anybody who is a beginner, I didn't bring them to the class. I'm not here to teach you basics. Go and learn that online. Those things are online. If you are here and you don't know how to trade or what is Forex and all that, go and learn the basics online. I want to show you exactly what it takes um, to be consistent, and that's the goal. So I'm going to give 1 more minute because I want more people to join the class. 1 more minute and then I will start. If you are not with your notes, if you want to watch this like Netflix, now I wanted to talk to you guys about the two things you will need to be successful moving forward, and I will show you one of it today. The first thing you will need, or the first thing I discovered takes for you to be consistent in the market, is your trading strategy. Now, some of you, especially when we studied the research, some of you already have a trading strategy. Some of you don't want a new one, and that's perfectly fine. My goal is to teach trading strategy along with the second part, which is very important. In fact, more significant, is how to think like a trader. Others call it your psychology. They call it mindset in trading. That one is almost, so to speak, 80% of your trading success comes from it. But guess what? If you have a good psychology and then your trading strategy does not make sense or it does not produce results, then you're wasting your time. You will turn out to be unprofitable by the end of the day. Now let's talk about the trading strategy. What makes a good trading strategy? So if you have a strategy you are working with already, you need to go back and check these things to make sure that you actually have a trading strategy and not just something that somebody gave you that you copied, because that's what most of us did. We went online, saw something someone else said, and then we copied that stuff into our trading. We will get success today and not see success tomorrow. Write this down if you're writing. Your trading strategy must have a statistical edge. It must have a statistical edge. What does this mean? Your trading strategy must have shown performance before. How would you find out if your trading strategy has a statistical edge? You must have back tested it. So if they give you something, or you bought something, or you learned something online, or you joined a mentorship, whatever was taught to you, you have to ask for the back tested data, or you do your due diligence and get the data yourself. So you take the strategy they taught you, whether it's a moving average crossover or it's a liquidity sweep or something. I think you just kick them out instead. You're muting here. Why not just remove? If you're coming, okay, let me just sound the warning. If you're joining for the first time, please mute your mic because your mic might not come in automatically muted. So I don't want you to interrupt the class. So please mute your mic. All right. So as I was saying, you back test it. Now, if you cannot get a back tested data, you have to forward test your system. whatever it is, whether you're using fundamentals, sentiment, or you're using technicals, or you're using ICT or SMC concept, or you're using structural liquidity, there is a lot of trading strategy out there. Personally, I believe that many things don't work, right? A few of them do. How you will find out that they do is to test it. This is what I did for myself. This is what we did for the team of traders that we work with. We tested the system. So go back and test it. How do I test this? Very simple. Get a demo account. Good. So let's continue. Now, for for your system, you're going to get a demo account. Whatever I teach you, if you don't have a trading strategy, don't worry, I will teach one. But if you do, take your demo and test your system. Make sure you take those trades up to 20 of them. Some of you say, I can't take 20 trades, and then follow the system as mechanical as possible and take 20 trades. After taking 20 trades, don't care whether it's a win or a loss. That's where you fail. Look, I'm going to shift your focus from looking for profits to the things that matter, and those things will make you consistent over time. The thing about success in trading is not the same like that in the world. When you come into the world of success, you want to go get it. You want to do this. You want to do that. When it comes to trading, you have to learn to follow the rules. I cannot make you money overnight. I can make it easier and faster, but I will not make you money overnight. And if that's not, if you are looking to hit and run, you might as well just quit now. But if you're looking to be consistent, this is what you must do. You must test your system, and you must test it over 20 trades, not 19, 20. After taking 20 trades, you will probe that 20 trades. You're not looking for profits, you're not looking for losses. You are following your system. If your system says, oh, when the market breaks out of this high, that's when you buy, and you buy and set a stop loss of 20 pips and you take profit of 40 pips on the 1 hour time frame, that's exactly what you will do. You test these things across 5 asset classes. 20 trades. Once you have 20 trades across maybe 5 forex pairs or 5 crypto pairs or 5 indices, or maybe you trade them across 5 derivative pairs. Once you have that 20 trades, then you will now sit down and assess how many was a win, how many was a loss, how many of these trades were actually profitable, and how many were not. So this is the this is the this is the thing you need to do to actually get that your trading strategy is working. So it must have a statistical edge. Now, there are 3 parts of a trading strategy. We're teaching you what to probe in a trading system. If you don't worry, after this class, I will show you. If you do, go back and look at your system. The first part of your system must carry what we call directional bias. Like I said, if you're watching this as a Netflix show, and you are lying down and enjoying yourself, we'll meet you after 3 months and you will tell us how profitable you become. Directional bias. Your trading system must carry directional bias. Your trading system must carry a directional bias. What does this mean? This means that in your trading system, whatever your trading strategy is, it must show you direction. It must tell you where the market is most likely to go to from here. This is how we trade. This is how the CEO of Caris Trading Institute, for those of you that know him, Bala Francis, trades. This is how I trade. This is how the entire floor trades. We look at a system that tells us, okay, from here, I'm likely to move higher, or I'm likely to move lower. This is it. Then the second thing about trading system is that it must carry what we call a frame. This means that your trading strategy, your trading pattern, your trading system must show you a chart pattern that says from here, the buy has started. And follow me carefully. If you're confused, don't worry, I'll explain. And finally, your trading system must carry an entry trigger. We call it an entry trigger. Some people call it an entry criteria. Some people call it whatever you want to call it. These 3 things are what we call it. You can call it exactly what I called it. It's fine. But let me explain step by step. Now, for directional bias, what I'm trying to say is If I come to my charts today and say I want to trade gold, in my system, whether I trade fundamentals, I trade sentiment or technicals, my system, a part of my system, a weighty part, should show that from here moving forward, the market is likely to go up. You understand? My system would show me that this Euro USD or this gold chart is going to go up from here. Once I now have where to go, then I will move to the next stage. If I don't see where the market is going from where I am, I don't move forward. And this is why many traders lose, because they move to the next stage without actually looking for the first one. The next stage is what we call a chart pattern, right? Or a frame. I call it a frame, but basically what it means is a chart pattern, and I will show you examples. What it means is a chart it's a frame. What does this mean? Okay, so I was saying that most of us, when we get new into trading, because the way we were trained is to work with the things we see, we love technical analysis. And technical analysis seems to give us a pattern to trade. It shows us a pattern where we trade. Let me zoom out. I'm glad you can all see my screen. Good. So I wanted to point something out. Now, technical analysis gives us a pattern where we trade, and most of us like chart patterns. So, say for example, area where there is a market that is trending to the upside, and then they tell us that anytime we see the market resting alongside a trend, we should look to buy the trend when the market returns to the trend line. And this is not in itself, because if you think about it, it's actually a way where we trade with the trend. And I'm using this platform because it's simple for everybody. Before you come to the next class, please, for those of you that don't know how to use TradingView, um, make sure you learn how to use TradingView. So I'm going to be quick so we can wrap up. Now, everybody can see this. So this is a chart pattern. When the market bounces off the trend line, they said the third time the market hits the trend line, buy it. This is all we now move to the charts to look for. But if you try this in trading, this does not happen all the time. This is a chart pattern that does not happen all the time. And most often than not, you will lose because your trading strategy did not tell you direction. So when am I looking to buy this if this is my chart pattern? Only if the first layer of my trading strategy, the one that tells direction, only if that layer says be a buyer today, then this chart pattern will now make sense. I don't know if I'm saying if what I'm saying is making sense. So I'm not interested in placing a buy unless I see that the market has told me to buy based on my system from the first layer. All right. Now the third part is the entry trigger, which means if this market hits this trend line like it did exactly here, and let me zoom in, and I'm looking to buy it. So my first part of my system has said we are buying. The second part of my system has said when I retrace to this trend line, buy. That's the job of the chart pattern. The chart pattern tells you when the bias has started. Write this down, read it again if you write it down. If you're confused, when you read it again, to make sense. The chart pattern you trade tells you when the directional bias has started. So the market might say, I'm going up, but yet the chart pattern is not ready. You wait for it. This is where the quote unquote wait for your system comes up. It's not just waiting blindly. You are waiting for the chart pattern that tells you the directional bias is on the way. Then you now start with your entry trigger. Your entry trigger is what shows you buy now. So the market can come to this trend line, and then the entry trigger is not ready, and you jump in, and scenarios like this is what you go through, where you see that the market breaks the trend line and goes against it. But if you see your entry trigger, this is where we get the term, or you hear it in the trading industry, high probability setup. So now I want to wrap up this session because there are a lot of things I want us to cover, but this would not be possible here. let me just do a quick summary, and then we'll meet in subsequent session. And I know I've been able to deliver value for this first class. I don't want to overwhelm you. Let me do a quick summary for those of you that are just joining us. We're talking about the two things you need for successful trading, not just to make money, but to be consistent. The ability to last in the markets will come from understanding how to use these two things. The first one is a technical trading strategy. Doesn't have to be technical, sorry, it's a trading strategy. It could be fundamental, it could be sentiment, it could be technicals. It could be a combination of all of them. Now, if you don't have a trading strategy that works, I will teach you one. I will teach you exactly what we use to be consistent using a trading strategy. If you have what works, there are things you need to tweak and check. First off, you must test your system. You know a trading strategy is a trading strategy when it has a statistical trading edge. What does this mean? Over the course of 20 trades, you have seen that the system comes out profitable than not. If you, in your trading journey, have not taken 20 trades that follows your system step by step, your mechanical system, then you will not see consistency because you've not probed that system. You don't know if it works. So open a demo account and take 20 trades following that trading strategy. It doesn't have to be mine. It can be anything you saw on YouTube, but test it. The second aspect of that is you after testing it, then you go through the data. What is the win rate? What is the risk to reward ratio? Does this work over time? How many trades did I take and which asset class does it perform best? This will give you the first part of a system, which is a trading strategy. Now, how do I even know a trading strategy is a trading strategy to begin with? Check these three parameters. The first one is a directional bias. What does this mean? It means that inside my trading strategy or your trading strategy, there should be something that tells you that the market is about to go up. It should tell you direction first. So from where I am to where to what I expect from the market is going to go up. It is not the chart pattern that tells you. Some of you like break and retest, and we have that here. You know, we like sweep of liquidity. When the market sweeps liquidity, then it breaks and returns to a breaker block. Some of you like that. You like when the others like when the market breaks structure. Let me mark that here. Some of you like when the market breaks this and then the market retests around here or around here, I want to buy. That's a chart pattern. You need something that tells you from where I am, I'm going to buy before the chart pattern makes sense. The last part is the entry trigger, right? This means that when the chart pattern has matured, you need something that says it is time to go. Enter now. Enter the market now. When you don't see that your setup is not high probability. And when you put these things together, it will make sense. Now, the second part is where we will talk about the psychology. And in the next teaching, the next online class, I'm going to be showing you my own trading strategy that I use. So they can all see this. Okay, we can all see this. Now, can everybody see my screen?
Yes, sir.
Okay, good.
Yes, sir.
All right. So the second part of consistency is where we will dwell on a lot. Next video, I will teach you my strategy, but that would not be enough. You will need to be able to think like me. Someone says if you can't think the way someone else thinks, you can't produce their results. So this is a PDF, a book I created a while ago, and I'm about to put, the team is about to put it on Amazon. So I wanted to give you guys for free. We'll send it to the group. On Amazon, it will not be for free. So you are the first guys that are going to have access to this. And I need you to take this diligently, study it, go through every process. It covers a lot of why is trading psychology 80%. Why do we say 80% of trading is psychological? It teaches the step-by-step process at which you can be able to start thinking like a professional. There is an ancient script that says, as a man thinketh, so is he. If you don't think consistently, you can never be consistent. It's the way it works. If you don't think the way consistent traders think, you can never be consistent. So I will bring this first class to a close. I believe we've done justice for the first training so far. Yeah, so we will continue in the group. If you're not in the group, join the group. That's where we'll get updates. If you have any question, we will open the group sometimes. But if you have any, you can just send me a DM or any of the admins, send them a DM. We just got started and I'm excited. I want to show you something that you would use into your trading from on Monday. And I think we'll be having another class and then I will show you what we use so you can start testing it from Monday. Now, with that said, this will be all for now. Cheers, welcome again to the class, and I hope you've gotten value from this. I will see you